All right. I think we should get going here. Thanks everyone for joining so far today. My name is Buddy Starr, manager here in Auburn. Joined today with Sam Clark. Sam's our Greentech Finance Solutions Manager for our territory here in the Northeast. Today we'll be presenting an intro to our Greentech Financial Services. Presentation should go for about 15-20 minutes or so, and we'll leave plenty of room for questions at the end. If you have any throughout the presentation, just type them in the chat, and we'll be sure to get to them. So I guess at this point, I'll just pass it over to Sam, and we'll get started.
Sounds great. Thanks, Buddy. Hi, everybody. Next slide, please. Thanks. So today, again, my name's Samantha Clark. I go by Sam for short. I'm the specialist for the Northeast Division. I'm based in Vermont. My background is a mix of solar and finance and clean energy. So really excited to be a part of the team and supporting you today. Thanks again for joining and making the time. Today, we're going to give you an overview of our Greentech Finance Solution programs. We're going to go over the differences between the different programs and how they will work for you. We're also going to share some insight into the finance trends that we're seeing across the solar landscape, how we're using our program and our partnerships to make an impact on your sales, and we'll go over the next steps to get started. Next slide, please. Thank you. So we have some different terminology here. You've probably heard us refer to our Ensemble Partnerships, our direct pay partnerships. So we're going to give you a little bit of a primer to help you understand what that means. As you can see, we work with multiple financiers. We have two programs for residential solar. NDP is our national direct pay program. That's available in partnership with Sonova and LoanPal. This allows CED to be paid at the same time you are. So we're transacting on a project level basis as you sign the loans with your customers or agreements with your customers. We're being paid on a project level basis, and the benefits to you are less credit for the CED is needed, and it adds efficiency to your procurement process. Our more strategic partnerships fall into the Ensemble program. We work with a number of lenders for both residential and commercial solar financing. In the Ensemble partnership, we're incentivizing your participation through a number of benefits. Accelerated cash flow, so we're giving you advance payments. You're going to get some upfront funding from the loan before materials are released, and then we're moving up those final milestones that you're paid in full at substantial completion. Many of these lenders or other programs you might be using may generally have a milestone holdback until PTO, permission to operate, or interconnection, and they're usually incentivizing you to wait a little longer for your money. So the benefits of working through Ensemble is you're going to get that benefit of the incentive of the lower pricing and the accelerated payments. Additional, as it calls out here, in addition to that, access to better pricing. So we have exclusive pricing, exclusive offerings, and products that are reserved only for CED Ensemble customers that you would not be able to get even if you were to work with some of these lenders direct. And again, these projects won't go against your CED credit line. On the commercial side, we do have a number of new programs launching from loans to PPAs and really excellent credit line solutions. We have a lot of new programs launching to help you with your commercial sales. We won't go into these today, but we can provide further information for you at your request. Next slide, please. Thank you. So diving a little deeper into what we mean by Ensemble and the three-way partnership terminology. Installers and sales orgs today typically understand that the solar sale has become a finance sale. In our program, we're providing access to quality financing and cash flow to power your sales and growth and strengthen your partnership with CED. The benefits to the lenders that want to participate in our program, they really see the value in CED. We have locations across the country. We're doing significant volume in the solar industry. So they're getting access to our customer base, working with more installers, seeing where their money is going on projects, and helping to be a part of your growth. For us on the distribution side, obviously it helps us to get paid a little sooner, get paid on time, it frees up your credit line. So we're able to provide more value to you. We want to help you grow so we can sell you more stuff. And then from a process perspective, whether you're working with these lenders outside of our program directly today or you're yet to be onboarded with them, once you do, your sales process will remain the same whether you're working directly with them or in Ensemble, you'll be able to work out of that lender portal to do all of your front-end customer sales process. That data will automatically populate for us on the CED side. So we'll have advance notice and visibility into your pipeline. We can earmark materials for you and have that communication about when you need those materials and upfront payments. So again, it just strengthens your relationship and your partnership with CED. And again, your sales and your ops team will barely know the difference. Next slide, please. So now we're going to pivot and talk a little bit about some of the residential finance trends that we're seeing in the market, a breakdown by ownership method, the trends we're seeing that drive the market. Next slide, please. Thank you. So this is a snapshot from Wood Mackenzie of Q3 of 2020, just to give you an overview of the residential solar market by ownership type and financier. As you can see, the vast majority of the loan market is participating in one of our programs. More often than not, how your customer is paying for solar is through one of our partners. We're aligned with a significant portion of the market. These are organizations that are experts in solar finance. In our market, we understand installers have a lot of experience working with state loan programs, credit unions. They can be really good, but typically we see that they're more focused on other parts of consumer finance, mortgages, car loans. They don't always understand some of the unique dynamics in the solar process, such as the investment tax credit, the timeline that plays into the loan and the financing aspect, or the fact that there's a utility offset and savings involved with this financing. So that is reflected with the solar lenders in their loan structures and underwriting. Oh, and sorry, you can click through. There's an animation here, and next slide, please. Thank you. These are just highlighting those NDP and direct pay partners. So market condition perspective. Anyone who's paid any attention to the news, as we all have been glued to for the past year or longer, understands that there's been a lot of unique changes and conditions. So the Federal Reserve lowered interest rates last year in response to the economic conditions relating from the pandemic. They've recently signaled their intent to keep rates low for the foreseeable future. We saw remarkable conditions in the housing market last year, and even folks who weren't moving suddenly found themselves trapped at home and either had more time or renewed interest in home improvement, which also led to an increased demand for solar. And despite these challenging economic conditions, lenders found that solar loan performance was strong. Default risk remains very low. And with the extension of the ITC at 26%, we feel that we can likely expect these favorable conditions to continue. Where in the past, my background in the years past, I worked directly for some of the lenders. We saw them incentivizing higher interest rate, shorter term loans. We're now seeing a shift back towards lower rates and longer term loans, signaling to us that upfront savings remains a top motivator for customers to go solar. So again, solar, the proof of concept is out there. Now, how do we pay for it? Next slide, please. Thank you. So this conversation, especially in the Northeast market, is a topic that comes up a lot. We're always talking about the difference in the inverse relationship between your dealer fee and your interest rates, and how to make the pricing work and find the right products for your customers. To me, one of the biggest advantages of the Ensemble program is that we have a wide range of finance products to cover all situations. Again, in this region, because we see the prevalence of credit unions or state loans with no dealer fees, many installers are very sensitive to that, and they want to avoid increasing their system price. So when you look at that and you opt for a lower fee product or no dealer fee product, you're going to give your customer the lowest upfront system cost. But generally, as it's associated with a higher interest rate, they will see higher monthly payments. So if you are expecting that your customer will probably carry that loan to its full term, and it's over a 10 or 15 or 20-year loan, they'll have higher monthly payments and they will pay more over the long term. So we generally recommend lower or no fee products as being most suitable for folks that are likely to pay it off very short term, or cash buyers that just need a bridge loan to kind of get them to a HELOC approval or some savings or what have you. On the other end of it, of course, With the buy down, again, you're buying down the rate. I can compare it. It's similar to buying down your mortgage points. When you take out a mortgage, you're paying more upfront and more money on the front end, but this results in lower monthly payments, the lower interest rate, and lowest total cost of ownership over time. And then again, because you are increasing their system price, you're also increasing the dollar value that their 26% federal tax credit represents. So in addition to giving them the lower monthly payments, you're allowing them to pay more off the loan to where they actually really do save more by starting with the buy down. So it's all about working with your customers to understand their goals. Are they looking to maximize their savings immediately? Maybe they're a young family, they just bought the house, they really just want to save on their electric bills and have reliable electricity, or are they at a different boat and they are more interested in paying the loan off quickly. We can work with our lenders. They have full rate cards with incremental buy downs. So you don't have to be at the extreme. There are incremental buy downs at various intervals, and we can consult with you based on your market and your goals and your pricing. We can provide recommendations and help customize the offerings as you see fit. Next slide, please. Thank you. So again, we just wanted to kind of highlight some of the differences here of working with one of our Ensemble lenders as opposed to some of the other programs that are available to you in the local market or that you might be familiar with. Again, credit unions are really great, low cost, member oriented, and some are better with solar than others. We'll give them that. But we're seeing that solar lenders have built their loans and underwriting again around these aspects of solar. They're more understanding that it's a utility replacement and there's financial savings involved. So you will just, when that's considered in the underwriting, you'll see more approvals and an easier, faster process. They'll go down to lower FICOs and you'll have a fixed rate. So whether your customer is on the low end of the 640 or 650 FICO spectrum or 720, they'll have the same rate. So you can have that same conversation in the home, tell them exactly what their payment will be, what their rate will be. Whereas some of the other financiers that you'll see are generally more risk-based. So your most credit-worthy borrowers will get the advertised rate, but folks that go a little lower into the FICO bands may see a higher interest rate and ultimately have to pay more. So it's just nice for streamlined, efficient customer sales process to be able to rely on and tell them exactly what the rate will be. Again, like I mentioned, all of these lenders have really great technology portals so that you can log in. The majority of them offer a soft credit pre-qualification. So you're sitting in the home with your customer, you're talking conceptually about solar. Maybe they're hesitant to submit a full credit application or have a hard inquiry. Maybe they want to know more, get a site walk first. But you want to know kind of what you're dealing with and whether the customer is likely to get approved for financing before you invest more time and a site walk into the project. So you can do a soft credit pre-qual on the front end, find out what they get approved for. And on the other hand, you can also send and sign the loan documents together in the home while you're sitting with them and have your sale all buttoned up. I've gotten a lot of feedback from installers who are working with credit unions or state loans, and that's the biggest challenge. A lot more upfront information is required, whereas the solar lenders have a very easy, quick credit app. Name, date of birth, social, address, email, income, and a low percentage of the time you may see a request to upload income verification. It's much more arduous and paperwork intensive to get approved for the local products. And the other side as well is you kind of lose some visibility. The ball's in your customer's court to go out, get approved and run through that process, and you're not really sure where they're at with it and have no control. So it's gonna help you again accelerate and control that front end sale and just leave less uncertainty. Another huge benefit, again, going back to the fact that these loans are all kind of designed specifically for solar, you're going to have lower introductory monthly payments. So generally, as you know, the first payment will kick in within a month or two of the installation. Their first payment will be calculated based on the assumption that the ITC is going to get paid back into that loan. So they benefit from immediate savings, the immediate benefits of the lower payments. And then they generally have a grace period with the solar lenders, typically around 18 months to get through a tax cycle or two, realize their tax credits, potentially other incentives that are available in their market and or utility savings, and pay that back into the loan. And if they pay just that 26% in exactly, they can expect their payment to stay the same for the remainder of the loan term. But again, it's a soft landing, so that's another huge benefit. They can choose not to pay into the loan if they're accepting that they will see a higher payment, and there's no other penalties or charges except that their payment will now go higher. But on the other side, they can also pay more money into the loan and see a lower payment. On the other hand, with the credit unions, you're typically going to see a payment calculated based on the full balance of the loan. They will give them an opportunity to reamortize if they have a certain percentage of a balloon payment to pay into that loan, but they're going to have to wait to get those tax credits to get there. On the larger approval amounts front, the solar lenders understand that in addition to just panels and racking and inverters, sometimes a lot more goes into these solar projects. So where the credit unions are capping you at, $60,000 or $65,000, those solar lenders are generally going to be able to approve creditworthy borrowers for up to $75,000 or $100,000, and they're allowing you to have some allotment in that loan to accommodate any re-roofing that is required for the project, electrical upgrades. And then many also offer, solar plus storage loans and other home improvement financing to round out and cover your needs in one place. And then transferable loans, I've heard some feedback. Occasionally customers want to know, hey, what if I move? I don't know what's going to happen in 5 years. Can I transfer the loan? Usually you can't with a state loan or a credit union. And then general too, you'll see that what ends up happening is that the loans are paid off with the proceeds of the sale. But the solar lenders allow the new borrower, the new customer moving into the home to apply and take over that loan. So you have a transferability, a possibility in those situations. Okay, next slide, please. Thank you. So just wanted to share a few testimonials here, just some folks that were really excited about the program, that they saw the benefits and the power. So you can just see here, this finance specialist, which is my role, we work with your salespeople. They made sure they got some proper training. They were motivated. They realized that they don't usually get that level of white glove service from other product distributors. So just understanding the impact of having someone who's going to work with your sales team and help them close more is kind of another soft benefit. And then installer number 2 here, we've been a major contributor to the continued growth of their company. With solar having so many moving parts, we are able to help keep things organized and efficient for them. Just wanted to share some of the awesome feedback we've gotten. Next slide, please. So requirements, who can participate? I've listed off here a number of what the most common requirements are. Again, you will always have to complete a CED credit application. So even if you're buying COD now, we'll have to just get an application in place. It doesn't mean you need to use that credit line, but that is a prerequisite, as well as a lender application. They will typically vary. Here are the most common requirements. They're usually looking for 1 to 2 years in business. Sometimes they'll have a minimum revenue requirement. There will sometimes be a financial review. They may request to see your P&Ls and balance sheets or bank statements. Most of them will want to see your licenses, your insurance, and your workman's comp. But if I could caveat anything in this slide, exceptions do apply. We generally have something for everyone. So please come to us and we're happy to walk you through what the underwriting requirements are and find out what program we can get you onboarded with. Next slide, please. So again, how to get going, whether you're already set up with one of our partners or you're brand new to our lenders, it doesn't really make a difference. Again, you just need that CED account, that approval by the lender, and we sign an Ensemble agreement, which just essentially says, hey, by accessing the benefits of CED Ensemble financing and exclusive products and pricing, we agree to buy a percentage of our equipment from CED. So we can talk more about that. And thanks, everyone. Ready for the last slide. Buddy and I, here's our contact info. Went through it a little faster than I expected, but love to make some time and answer questions from the group if anyone has anything.